So it's going to change my view on what the Fed's going to do, but not where the market's going to do. And actually, because of what you said, I'm focusing on you saying, hey, this is softening up the beachhead for what's to come. I think that's exactly right. So the market will adjust to it. It's off whatever it is, 0.3 on the S&P 500 right now. That's not throwing me. The market will adjust to that. What the market is also adjusting to are the positive economic forces right in front of us. People traveling, factories being built, jobs plentiful. It's just really hard for me to see a recession, which is what is necessary for me to get negative at these levels.
Unless the market is, we're all trying to figure out exactly what the message of the bond market is, and maybe that is the message that it's trying to send, that it's worried about the fact of going into a recession because of aggressive Fed activity, the likes of which Jay Powell just laid out. I'm looking at my computer here because this is your tweet. You're missing the move, Steve. I told you for 2 weeks ago into the Fed meeting last week. I did all I could to get you to move into the light. You remain in the dark. Quoting Mike Wilson, who's been negative, obviously, is not a good look. So, Steve, I want your reaction to that, and I want it on the level, too. I don't want this to devolve into something unseemly, but what's your reaction?
So here's a few things. First of all, the same people are bullish now have been bullish for 6 months. Market's gone nowhere in a year, except it's gone down. The average stock has gotten crushed. It's down between a crash, 50%, the average NASDAQ stock, and between a bear market, 20%, or a correction. So that's been the right way. Mike Wilson has actually been dead on because he's focused at the stocks underneath the indices rather than top-line indexes. So if you're an index investor, then frankly, most people should be, then you're doing okay, minimal losses. But if you pick stocks, you've lost a lot. So look, here's how I look at it. I'm just not getting paid for the risk. So for all the talk that you don't know the negatives, that you know all the negatives, you also know all the positives. So what can change? We saw one data point that changed today is a more aggressive Fed. This is the most hawkish I've seen any Fed that I can recall, except for in the 70s, where you had just ridiculous inflation, which, by the way, wasn't driven by supply chain issues, which have not really abated that much. So that's my concern. And frankly, I haven't missed the move in the market because it goes to more than stocks. It goes to what the beta is of those stocks and the individual stocks you own. So on some days last week, and it's only been a week, and we will see more rallies during this stage, but the market's not going to get to new highs, not going to get very far. So what I mean by the beta and the stocks that I own, it's about stock picking. Look at the news that came out from XPO. Look at FedEx, which I bought at 200. That's moved. So it depends on where you go. I'm not against putting money to work in the market. I'm against putting wholesale money to work in the market because I don't believe that we've necessarily hit the lows. And so if the market goes up another 5 or 10%, great. If China does invade Taiwan, it goes down 30 or 35%. I don't think that's a pie in the sky, thing that's going to happen. I think it's very realistic that it happens. So again, I'd rather miss a little of the upside, which I have not missed, than miss the downside.
Jim, give me the last word, then I'm going to move.
Yeah, the stock market, the S&P 500 is up 16% over the last year, trailing 12 months. So Steve said it's down. That's just not right. As far as Mike Wilson, even at the lows of last month when the market was down 13% peak to trough, the S&P 500 was still up 13% over the prior year, a prior year in which Mike Wilson had been calling for a bear market the whole time. If you're following Mike Wilson, you're not making money. And I've tried to work on Steve over the last 3 weeks, but I just, he's so convinced he's right, but he's not making money. I don't know what to do with him.
Look, Steve's not following Mike Wilson. That's a little intellectually dishonest, right? Mike Wilson, to your point, has made the calls that he's made, but Steve Weiss is not following Mike Wilson. He's simply citing him, and maybe he agrees with him now, Jim.
Okay, you see a distinction where I don't, but I think the overall point here is that the tone of the market has changed, and it's clearly focused on the positives right now. The fact that it's brushing off right now with the Fed, what Powell just announced, is an indication. You have to respect the market. How many times have people said that to me? The market is changing its attitude right now.